Hello, I'm Jason Farris, and today we're going to discuss a financial planning strategy that may lower your income tax liability. Stay tuned to find out how. The Tax Cuts and Jobs Act brought many changes to our tax code, but today I want to spend a moment to discuss charitable deductions. While the changes don't eliminate the deduction for charitable contributions, it may wind up having a similar effect on many taxpayers. You may be wondering how. But by simply doubling the standard deduction, the tax code will significantly reduce the number of tax filers who itemize. The new law also adds the reduction of itemizing by capping the value of the deduction for state and local taxes at $10,000, far below what many taxpayers living in high tax areas of the country will actually pay. So what's the fallout of this? In the past, roughly 30% of us itemized our deductions. That number is expected to drop. And if you don't itemize your deductions, you can't deduct your charitable contributions. Here's an example of how this works. Let's suppose a married couple plans to make $14,000 worth of charitable gifts this year. Their state and local tax deductions are capped at $10,000. Together, the two equal $24,000, which happens to be the same amount of the new standard deduction. So the couple will essentially receive no taxable benefit for their charitable gifts. So what should you do? One way to overcome the impact of the new tax provisions is to bundle several years' worth of charitable contributions into a single tax year, contributing the higher amount to a donor-advised fund rather than to the charities directly. If the same couple were to give 2 years' worth of donations to a donor-advised fund, that would come to $28,000, add the $10,000 maximum deduction for state and local taxes, and suddenly it makes sense to itemize again. The additional $14,000 results in a tax savings of about $5,000 for people in a 37% tax bracket. Going forward, the money in the donor advised fund can be distributed each year to charitable causes just as have been done before in $14,000 annual increments. Meanwhile, the assets that remain in the fund are growing tax-free, creating additional charitable assets for future donations. Bundling of charitable deduction can be a very beneficial strategy. You should consider incorporating this in your financial plan. If you're not familiar with donor advised funds or the Tax Cuts and Jobs Act of 2017, please check out our other articles. Thank you again for joining me, and I'll see you next time.